All right, so for the occurrence assertion, remember we're starting from the accounting records and we're tracing from our sample that we've selected from the accounting records. We're going to go back to the source documents, okay? And we're going to check the source documents for validity and occurrence, okay? So it could be the employment contracts, the pay slips, all of those supporting documents, okay? But a very, very important procedure, specifically on salaries and payroll, would be the physical verification of the employee. That is considered the best test for occurrence and validity of salary costs. Why? Because one of our big risks are, like we've said before, fictitious or ghost employees being created on the company's payroll. Okay, so as the auditor, we want to physically get the list of employees and physically be able to see them on duty. Okay, see them physically carrying out their duties. Okay, in terms of accuracy, if they are receiving a time-based salary, okay, the wages based on the hours that are worked, we need to be able to trace whatever payroll costs are recorded. We should be able to recalculate that based on the hours worked, agreed to the timesheets or the clock cards, multiply that by the wage rate or the daily wage rate that you get from the personnel records or the pay slip or the employment contract. Okay, and then the deductions we get from the authorized forms that the employee needs to complete, medical aid, pension, and then we've already said that the pay as you earn is a mandatory or a statutory obligation for the employers. If the employee is above the tax threshold, the employee just needs to provide the employer with their specific tax number. Okay, so if the auditor wants to recalculate the pay as you earn, okay, we're going to have to do a recalculation of the employee's taxable income, okay, and then we get the tax rates that are applicable to this employee according to the the latest tax tables that are available. Okay, so here you're going to apply some of your tax knowledge as well, and then you recalculate the pay as you earn and compare it to what has been recorded by the client, either in their separate payroll software or in their GL as well. Okay, and then the pension will obviously then be agreed to whatever the employee's employment contract states, the percentage of their total cost of employment that goes to the pension, medical aid to the medical aid tables, and then UIF, or in the case of Namibia, the Social Security usually has a fixed amount of $81 currently. Okay, then for completeness, the direction of testing changes now. Okay, so for occurrence, we said we start from the accounting records, we trace it back to the source documents, but for completeness, we're going to start from the source documents and we trace it back to the GL or the payroll software. Okay, so we're going to start from the clocking cards, okay, or the timesheets, okay, or the employment contracts, and trace those amounts back to what has been recorded in the payroll subledger or the separate payroll software, trace it back to the GL and then back to the TB. Remember we spoke about earlier about these amendment forms, employee amendment forms or payroll amendment forms, and we said that they need to be pre-numbered, and so for completeness sake we can do a sequential check here as well. Okay, for cutoff we make a selection. Remember that those last few transactions before year end and after year end to just verify whether they have been recorded in the correct accounting record, and we trace it both ways. Okay, the time that has been recorded from the timesheet to the records, and then from the records to the timesheets as well, just to get both directions as well. Okay, now remember we've got 8 employees that are salespeople, okay, and they earn a commission on the sales that they make on any vehicles. Okay, So one of the payroll costs, one of the line items that's going to sit in your statement of comprehensive income would be commission expense. All right, and it is likely based on the sales and the amount of sales that has the sales volume that has happened during the current year. It could be a material amount, so it does require the auditor to test it. Okay. So for commission, okay, first of all, we would need to get the specific policy, the approved policy for commission that is paid out. Okay, then we would need the sales listing, okay, per employee, okay, how much sales have they made during the current year, or yeah, for the current year. That sales listing needs to have been approved by the sales manager or whatever the case may be, the specific level of authority that needs to approve those sales made. And then we can do a recalculation based on the HR policy. In this case, it says 5% of total sales. We can do a recalculation, get the total sales multiplied by 5%, and that should give us an expectation of the commission expense. Okay, just remember that that sales listing also needs to be audited. It should hopefully then have been audited when you were auditing sales and revenue and receivables under that cycle. Okay, but remember, we need to make sure that the sales that have been recorded, that they have actually occurred, they are accurately recorded, appropriately classified, and that they are complete. Okay, so any of those sales recorded on the sales listing, you should be able to trace it back to the invoices, the delivery notes for when the clients come and collect the cars. They obviously need to sign some sales contract, and if the bank is involved, there would probably also be an HP contract involved there as well. Okay. All right, and we have now briefly also spoken about the HR policies for leave days, and we would then expect, okay, that there should be a leave pay provision as well. Okay, this provision is usually created. Why? Because at the end of the year, we do not know how many employees may resign. Okay, and then they are required to be paid out their remaining annual leave days. Okay, so remember what is the definition of a provision? Okay, this is now your accounts knowledge. It is a liability of uncertain timing or amount. Okay, so we've just said we don't know whether we're going to be required to pay out any employees their leave days. Okay, so once again, we get the approved policy in terms, the HR policy in terms of how many leave days an employee is entitled to. Okay, that creates a contractual obligation. The employee is entitled to take their leave days, failing which the company or employer needs to compensate them for that. Okay, so we get the payroll report indicating how many leave days an employee has left. Okay, for all of the leave taken during the year, usually there should be a leave form or a leave application filled out, completed, and approved by the relevant supervisor or authority. Okay, so we are able to assess the completeness of the leave report for how many days are left per employee. We take those leave days and we multiply it by the employee's daily rate, which we recalculate from the employee's employment records or their pay slip, and we should then get back to the leave pay provision per employee. The remaining leave days or untaken leave days per employee times by that employee's daily rate, that should give us the leave days per employee, the provision that we need to that we can expect as auditors should have been provided for by the client. Okay, unclaimed wages. If a company or an employer has wage earners on their payroll system, we've said before it could be that not every person is able to physically collect their wages at the end of a specific week. Okay, and we have an unclaimed wage register. Recalculation also, once again, or reperformance done here. We need to then just assess that if from a sample of those that have collected their wages, we trace those signatures. Okay, when the employee comes to collect their wages, they need to sign for it. Okay, so that there is a confirmation that they have physically received their wages. We trace those signatures back to the employment contract. Okay, because it could be that one employee is taking or is collecting the wages on behalf of someone else unauthorized. If it is authorized, remember we said previously that they should have some sort of proxy form by the employee stating that his friend or colleague will come and collect the wages on his behalf. Okay, so we trace the signatures back to the employee records, and we are then able to do a recalculation of what is left, the time, trace it to the timesheets or the clock cards, and then the wage rates to the employment records. Okay, so you have seen now that the cycle depends on the nature of the employer, i.e. the company that we are auditing. We need to get a very thorough understanding of each of the functions within the cycle, the types of controls that the company has implemented, management of the company has implemented, and then that will then determine the extent of the substantive procedures that we also need to then conduct to obtain audit comfort over the transaction or the account balances. Okay, so that's it for our payroll cycle. Please do remember, if there's any questions, you are always welcome to email me or send me a WhatsApp message as well. Okay, enjoy the lesson.